Hey everyone, it's Amit. So unless you've been living under a rock in the last week, you've probably heard about a lot of action that's taken place in the stock market. And there's really been 5 particular characters who have been involved underneath all of this action. Okay, there's been your hedge funds or your institutional investors. You've had a subreddit group called Wallstreetbets who have been trading various stocks, primarily GameStop, but they've also been trading on like BlackBerry and AMC and Nokia and a few others. You've had regulators such as the SEC involved. You've had brokerage firms. And then the 5th one is you've been celebrities. You've got celebrities who have been involved in this whole thing, which has created a significant amount of volatility into the stock market. And it's important for us to understand what actually happened due to a variety of different reasons, okay? One, it's important to see what happened with this particular stock that's driving so much of this volatility, just to get an understanding. But could it or would it potentially happen with other stocks as well? The second reason why is there's going to be a significant amount of regulation that comes out of this. And the third reason you probably want to know about this is because there's going to be a significant amount of lawsuits that come out of this, and some of those class action lawsuits have already been filed against some of our significant brokerage firms. Let's get into it. So the main character that you need to know about, at least from a stock perspective, is this company called GameStop. For anybody that grew up in the 90s and 2000s and so on, you guys are very familiar with GameStop, which is basically a brick and mortar store, a group of stores, is 5,000 stores or so, who essentially trade in video games. Okay, that's like the simplest way of putting it. It doesn't take any genius to know that brick and mortar, for all intents and purposes, has had significant amount of struggles lately. Okay, so people have moved to online platforms. So GameStop has essentially had a significant decline from a sales perspective, from an operating margin perspective, over a net income perspective, over the last several years. So when you had this company that's going through such hard times over the last few years in a market or an industry which you think is relatively favorable, because there's nothing essentially wrong with video games. There's so much demand for video games. I mean, heck, you can't go out there and get a PS5 if your life depended upon it right now, right? So there's nothing wrong with the video game business, but you've got this company in this particular sector that is struggling so much. So you had a guy whose name I cannot say on YouTube, but essentially he's created this whole bull thesis in terms of why he has a significant amount of optimism on GameStop stock, and essentially put an article out on this subreddit, Wallstreetbets, all the way back in late 2019, and he started buying call options on this particular stock, which is basically him saying that I'm very bullish on it and I want to buy this stock at various prices. Now, what's also happened a few months later is there's this other guy. His name is Michael Burry. Okay, Michael Burry is very famous in the financial space, largely because he was somebody that anticipated the stock market decline as it relates to the real estate bubble back in 2008, and he made hundreds and hundreds of millions of dollars from it. Okay, so he was able to forecast that, and he saw something in this whole GameStop game as well, and was in the notion that, hey, this company is being poorly managed, took a significant position into that particular company at like 6% of the outstanding shares, something to that effect, wrote a scathing letter to the board of directors and basically told them, hey, you guys need to turn this business around, and you guys basically need to buy back a significant portion of your stock such that we can essentially move the stock price up and make sure that this company is better managed. Okay, so then we fast forward a bit more, and then you have this other big CEO. He's of Chewy organization. His name is Cohen, but he started taking a significant percentage of the ownership stake into GameStop as well, up to like 9% or so, and wrote another scathing letter to the board of directors for GameStop, and basically laid out a bunch of really good points that you would think would be fairly intuitive, right? So he essentially said that this is an industry that is experiencing significant growth. Why is GameStop not essentially participating in that? He said that, GameStop has got lots of valuable assets that is not being properly utilized. And he said that despite all of these good things that are essentially out there, GameStop is struggling. So why is that the case? And he wanted to have some answers around it. So that was basically the contents of that scathing letter. So what he got out of it is, of course, 3 board seats, such that he could have oversight into the management team, such that they can effectively turn this thing around. Now, what's happening is when you had this Michael Burry thing, you had this Cohen thing, it's creating a significant amount of action in this Wallstreetbets subreddit group. It's creating so much action, so much buzz, that more and more people start buying more and more of the company's stock. Now, what's also happening on the other side is you've got all these institutional investors who think that this GameStop is essentially a dead duck, right? So they're shorting the stock. I don't think we need to overcomplicate this whole notion of shorting a stock, right? But basically the fundamental premise is that if you think a particular stock is going to drop and you want to profit from it, you short the stock. If you think that a stock is going to do well, you go long the stock. But that is the fundamental notion of it. Okay, if the stock drops, you want to short it, and if you think that you want to profit from it, essentially. So you have these institutional investors who are taking these massive positions, right? They're going nuts out there, and they're basically saying that, okay, this thing is going down to nothing. We don't really care what these guys are basically doing. It's just a poorly managed company. So the short position on this particular stock was at 140%, which basically is another way of saying that you have a bigger short position on the stock relative to the number of shares that are even outstanding in the entire marketplace. Okay, so that's how much or how bold they were from a stock shorting perspective as it relates to GameStop. So while this is happening, right, you get all these folks on Wallstreetbets, right, who are relatively, quite a few of them are very sophisticated. Okay, they start seeing this type of pattern, and then they start thinking that, hey, there may be a short squeeze opportunity here. So one of the biggest problems when you have a short game like this with some of these institutional investors is no max in terms of how much of a downside risk you can potentially have. If the stock starts moving up and you have a short position on that particular stock, you are getting screwed. Okay, you're going to be in a lot of trouble, especially if the stock does not stop going up. Okay, so what these folks on Wallstreetbets started doing is they started buying tons and tons of this particular stock, and then they started driving the price of the stock up. Now what's happening is these guys on these institutional investors, these hedge funds, are like, holy crap, what is going to happen here, right? We're going to lose a ton of money. We need to start covering our positions, and the only way to cover their short position is by going out there and buying more of GameStop stock. So when you buy more GameStop stock, try saying that quickly, right? But when you try to do that over and over again, and you got these Wallstreetbets people trying to go over and over again and buy the stock. I mean, there's 2 million subscribers to this Wallstreetbets. Not that all of them are buying the stock, but you know, you have all of this activity which is further pushing up the stock price higher and higher. And that's where recently you see the stock at 200, 300, 400, it hit like $450 a share. I mean, this thing was trading at 19 bucks a share just a few months ago. Then what you have, okay, is this is where the celebrities come in, okay? And some of, I call them celebrities, but some of these guys are actually pretty big investors, right? So you had like Chamath come in, you had Elon Musk start talking about it. Now they all started tweeting about it. Heck, you had Mark Cuban talking about it. AOC was talking about it. Everybody's talking about this thing. So it started further pushing up the stock, and it became more of this David versus Goliath thing. And everyone started rooting, or a lot of people started rooting for the David in this particular situation. Okay, so now what started happening is these Wall Street companies, these institutional investors, started panicking, okay, because they've got all this money that they essentially need to return back to the borrower, and in order to buy the stock, it is so unbelievably expensive. And then you have companies like Melvin Capital that essentially needed a funneling of cash, or a funding of cash, which basically came from this other Wall Street firm called Citadel, which is based in Chicago. But at any rate, you had all that incremental more money coming into this particular company just to support them so they don't go belly up. So then what happens, right, is like this magical thing, right? All of a sudden, right, a lot of the retail platforms where these retail investors, or these brokerage firms, right, where retail investors have to go ahead and buy a stock or have to buy a call option or whatever, all of a sudden they start getting freezed out. Okay, so they start going in to buy a call option, and then all of a sudden you see that the call options is not existing, or it gets grayed out such that you can't essentially buy it. People are not able to buy GameStop stock even straight up. Okay, there's all these hours and hours of the day where all this trading activity on GameStop stock basically stops for the retail investor, right, and not necessarily for these institutions and these hedge funds and so on, because these hedge funds in the meantime, they're out there looking for buyers such that they can buy some of the stock, right, and it's creating some level of a market imbalance. And that's what's creating a lot of consternation amongst a lot of folks, right, that are basically saying, hey, why do the institutions have the ability to continue to do so? Why do the market makers have the ability to continue to play in the market while we as a retail investor do not have the ability to do so? So you have that, which creates even further madness as it relates to this particular thing. And it's not over yet, okay? So at the recording of this video, I mean, GameStop stock is sitting at around $270 a share. It had a significant decline today, but it's not even over, right? Because we'll see what happens tomorrow, because this thing may continue to run up in aftermarket trading here. So that's in a nutshell what's happened, okay? And that's in a nutshell what's driven so much excitement and so much activity on some of these stocks. And it's even like kind of carried over into certain other stocks that have a significantly heavy short position on them, okay? Some of the stocks that I mentioned in the beginning part of this video, such as BlackBerry and AMC and Nokia, this created a lot of short interest in those, or there's been a lot of short interest in those particular stocks. And now you've got these folks in Wallstreetbets trying to effectively recreate some of this gold mine that is essentially GameStop, right? Because, as I said, there's no way to cover your risk when the stock starts going up and you have a significant short position on it, okay? So this has raised a ton of questions, right? And this is where the regulations are going to come. This is where the lawsuits are going to come, right? So one of the questions is, well, is this truly a free market, right? Do retail investors essentially have the same playing field as an institutional investor? Because it would certainly seem like, based on the fact pattern that happened here, that may not necessarily be the case. Now, I know, just being in, playing in stock markets and investing and this and that over a very long period of time, that there is a certain reason why you have this level of an imbalance, but it does bring that fundamental question up: is should it exist? Or should it not, right? So that's the first question that's basically going to come out, and that's going to result in some level of regulation associated with it. The second question that's coming up is, well, what do you do with these brokerage firms who have a vested interest in the success of the institutions relative to the success of the retail investor? So a lot of these companies will talk about, oh, we've got no commissions, no trading fees, no this, no that, right? Just come ahead, buy whatever stocks you want, and move on with your lives, right? So that sounds pretty compelling from a retail investor's perspective. But what's not fair is when the brokerage basically takes some of that information, takes it to the market makers, who are essentially these Wall Street firms, basically these institutions, to effectively execute a lot of those trades, right? Just that they have some level of insight, and then these brokerage firms basically take a commission from them, right, to provide them with this information. So it creates some sort of a conflict of interest here, if you will, right, in terms of, what is this supposed to look like, and how do you maintain that level of independence when it comes to some of these brokerages in terms of how they actually make some of their money. And due to that, right, and that's where some of the lawsuits are coming in, because there's been all these cases that have effectively been filed, some class action cases that have been filed against some of these brokerage firms. The next question becomes is like, what regulations should effectively be imposed such that you can't necessarily create this significant amount of short position like what these institutional investors basically did on this particular stock, right? To have 140% short position on this given stock creates some level of consternation within itself. Now, I know there's certain talk about like recursion, and it sort of like makes sense in terms of why it's 140% relative to the number of shares outstanding. But with all of that said, it does create this notion of how much risk are you guys on these hedge funds basically taking, and is that a palatable amount of risk when you're basically utilizing investors' money? And then of course, the other question is, who's next, right? Who's going to come up next in this particular fiasco as well, right? You had GameStop. Is AMC up next? AMC has had this significant run up, then it had a pullback. Same thing with BlackBerry. Yesterday it had a significant run up, today it had a pullback. A lot of these stocks are kind of like oscillating in that manner, to the point where Robinhood has basically come out and essentially said that we won't allow some of this closed activity as it relates to a lot of these stocks, inclusive of American Airlines and a few others, okay? So there's lots of companies that are essentially getting faced with the same type of a problem. So, this is by no means over yet, okay? So if you go on Wallstreetbets, the subreddit, right, it's basically talking about a significant continued exposure and continued pressure for people to continue to hold on to the stocks or potentially even buy more. And as long as they keep doing that, it's going to create this significant amount of pressure on an ongoing basis with some of these institutions and hedge funds. It's basically like, further energize some of these folks, if you will, and even some of these trading halts, which some of these exchanges have done, and then the brokerage firms further boxing people out. It's creating like more and more of this pent-up demand. So, it's pretty hot on Wallstreetbets still, and I don't think it's necessarily over. So we'll have to see how tomorrow goes in terms of what happens with GameStop, as well as some of these other stocks. And there's also this broader question, right? There's a broader question in terms of, okay, so what's going to happen with social media just in general? Because there's lots of groups similar to Wallstreetbets that effectively start talking about this type of thing. People are very interested now in social arbitrage, and they're looking at patterns or trends with no or wanton disregard for any level of fundamental analysis as it relates to stocks, right? So, is the stock actually actually worth a certain dollar value or not? Or should I just pick up on the trend and run with it, and then basically when the trend fizzles away, I better be out of it and cash in on some of my gains? So it's kind of creating that whole notion of, where is social media and all of this essentially going to take a lot of these stocks in the future. Hopefully what you got out of this video is something around, well, what happened? What drove a lot of this action or activity as it relates to GameStop in the last few weeks? Where is some of this going? What is creating some of this exposure? What is driving some of this class action lawsuits that are basically coming out? What are going to be some of the regulations that basically come out of this, right? There's going to be some of that pressure. I think there are certain tools and vehicles that already exist, actually, to be honest with you. But, why are those tools not being effectively utilized in some of these? Those are all the questions that effectively, we have to solution for in the next upcoming weeks, months, as well as years. So it's a very, very interesting time. And, I hopefully you enjoyed the contents of this video. If you did, definitely subscribe to the channel, hit the like button, and also ring the notification bell so that you're notified on any updates as it comes out of this particular situation. I will see you soon.